Welcome to the latest Motley Fool Scoreboard. I'm on Chocobaloo. We've got longtime fools, Travis Hoyam and Rick Menares, giving a 1 to 10 rating to a company I'm still down over 90% on, but at least I bought too much of it. It's Teladoc, ticker symbol TDOC. We'll talk about the business first, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Travis is at a 3. Rick is the bull here with a 4.
Yay, bull at 4. So it's not just Anand's Teladoc position that has fallen and can't get up. Teladoc was on top of the world back in 2020 when the medical community turned to video conferencing and basic consultations as a safer and more convenient way to help patients. Teladoc was in the right place at the right time as a leader in telehealth solutions for basic medical guidance, mental health, and eventually condition care management with the acquisition of Livongo. In August, it's August now, so this is the 5th year anniversary of Teladoc paying $18.5 billion in cash and stock to buy Livongo. All of Teladoc today is worth $1.5 billion. It's been that bad, and competitive pressures are mounting.
Yeah, I can't believe I'm more bearish than Rick here with a 3, but I just don't like anything about the business. It sort of hits some interesting valuation metrics, which is why I dug into it a little while ago. 102 million members. This should be a healthcare juggernaut. I think telemedicine, that entire field is really interesting. It should be growing over the next decade or two. But here's what shocked me. Revenue per month per member is $1.27. Okay. Only a little over 1% of members use Teladoc on a monthly basis. This is something that employers are paying for that people don't even know that they have. They don't use, they don't care about it. And if members don't care, then it's not really a business that I'm going to care a lot about either.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson, Travis is at a 3, Rick's doubled him at a 6.
Yeah, so Teladoc has some uninspiring Glassdoor scores. CEO Chuck DeVita has a 49% approval rating from employees, and only 47% of them would recommend working there to a friend. In DeVita's defense, he's only been at the helm since June of last year, so I'm not sure how fair or accurate those scores can be. If he's making folks uncomfortable at the company, I don't think that's a bad thing, given how poorly the stock has performed the past couple of years. Go ahead and break things in a seemingly broken company. However, until the signs of a turnaround are more clear, with apologies to Ricky Martin, I'm not living the Vida Loca. 6.
Yeah, I went even lower here, and part of it is because I think this might be the wrong person to turn around Teladoc. I mean, this is a little bit of a to be determined because DeVita hasn't had enough time to really execute any sort of major plans. But the business right now isn't going in the right direction. And if Teladoc is going to be disruptive, which I think that's the ultimate upside story for Teladoc, he's probably not the right person because he comes from the traditional insurance industry. I don't think that's how you build a disruptive business, by going in and integrating with the existing business. You got to do something completely different. That's not what he's doing. So I got to go pretty low here.
Oh, that's a foreshadowing, I think, on your topic. We'll talk about financials. A 10 is a fortress. A 1 is yikes. Travis is at a 3 again, and Rick is at a 5.
Yeah, so revenue nearly doubled in 2020, and it almost repeated the feat a year later. The Livongo deal helped inflate those results, but even heady organic growth back then, it was never sustainable. The problem is that revenue has now declined for 4 consecutive quarters. It has never reported a profit, a hella knock on Teladoc. The financial picture gets better when you turn to the balance sheet and cash flow statement. Teladoc is flush with cash and manageable debt, and it's been generating 9-figure free cash flow for years.
Yeah, I think the numbers look good on the surface, but you add in that debt, it is a net debt position of $350 million. So it's not net cash. If you're going to have, kind of weak operations, I at least like to have net cash on the balance sheet. That free cash flow positive number is true, but that's only because free cash flow pulls out stock-based compensation. That's why they're losing so much money on the bottom line. I just don't see how the company grows or expands margin. This should be a industry that's getting to the point where they have scale, where they're able to pick up a little bit more in margins. That's not what we're seeing. So I just don't like a lot about the company's financials.
Let's move on to valuation. Travis, how well will Teladoc stock do over the next 5 years? I think I can guess. And how safe is it? A 10's a sure thing and a 1 is a lottery ticket.
I tell you what, I'm going to be consistent here. My expectations for Teladoc is less than 0%. Like I said, that net debt position really worries me. I just think they're poorly positioned in the market if there is some sort of change or disruption that's coming in the healthcare industry. With a safety score of 4, here's my basic statement. I'm not gonna be surprised if Teladoc doesn't exist as it currently exists in 5 years. Whether it's the remnants is acquired by another insurance company or somebody else, or they just go bankrupt themselves. That's maybe pushing things a little bit too far, but I just don't have high expectations here.
I went the other way. While I am bearish on the current fundamentals, I went with a 15+% a 5-year return annualized rate, a safety score of 5. So like a stormy day in grade school, there's no PE today. Its EBITDA multiple is about 40, and that's obviously very high, but it's going through operational struggles. But the revenue multiple is roughly double its market cap, so that's a pretty low multiple in this space. If it can turn things around, and that's a big if, the upside is substantial. At 15% plus a year, Anand, the stock could double in 3 or 4 years, and you would only be down 80%. Hooray.
Yes.
Now it's getting harder for Teladoc to stand out in this competitive climate, but it doesn't mean a standout performance from this widely discarded medtech company isn't possible.
All right, let's move on to everyone's favorite topic. Travis, what company do you like better than Teladoc in this space?
If you want to have disruption, you got to do things completely differently, like going outside of the insurance industry. That's what Hims and Hers is doing. This is one of the companies that I really like, their future potential, growth potential. It's only about a $10 billion company or so, and I think there's a ton of potential to grow. They have demonstrated over 100% growth recently. I think their guidance is for 65% growth for the full year of 2025. Their margins are expanding. And guess what? People choose to use Hims and Hers, unlike Teladoc. So that's why those numbers are completely different. And I think they've got the potential to be 10x or even more than that over the next decade or so.
So I went with Doximity. They are the company. It's basically the LinkedIn for healthcare professionals. 80% of the doctors and physicians in this country are on Doximity. About half of the nurse practitioners and of the physician's assistants are also on there. So it has that whole networking effect going for it. And while it's mostly an ad platform, because obviously you will pay a lot of money to reach doctors if you're a pharmaceutical company or a maker of cars or golf courses, whatever, you will find that with Doximity, it's also it's a growing business on the telehealth side because they offer workflow tools like digital faxing and also telehealth services.
Maybe I could have some sort of share exchange program for my Teladoc stock into one of these. Thank you to both Rick and to Travis. They've given Teladoc a low overall score of 4.4 out of 10. It's actually better than last time when we did it a year ago, but there's not much to hang our hat on other than hopes for a turnaround. As Rick explained, it's a big if. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Booking Holdings. Till then, full on.
Most of those 102 million people that you're going to be mentioning, Travis, don't know that they have Teladoc. It's just
right.
So it's like they don't even know. And even of those that know, very few of them are actually taking in visits. Actually,
4.1 million quarterly visits.
There you go. So less than, and that's 4%. And that's if there's repeat. We're talking about maybe 2-3 million of those 102 million people are even using it. So it's pretty sad.